Yes, event arbitrage. I mean, but we sort of stopped doing it because it's such a crowded place. But here's little Berkshire doing it again in Activision Blizzard.
Warren Buffett recently sold $500 million, or about 13% of his Activision Blizzard stock. We're going to look at possible reasons why. In January 2022, Microsoft announced its intention to buy Activision Blizzard for $95 per share, or $69 billion in total. Warren Buffett started buying Activision Blizzard for Berkshire Hathaway in the first quarter of 2022.
One of the things I bought, was bought for a different purpose by a different manager months earlier. He bought roughly 15 million shares of Activision. On January, 17th or 18th, something like that, Microsoft announced they were going to buy Activision for $95 a share.
The share price was around $81 per share, implying 17% upside if the deal went through. This sort of investment, where you buy shares in a business that's being acquired, goes by many different names like risk arbitrage or workouts.
We call them workouts or something like that, and they become known as arbitrage. Well, they're not really arbitrage.
As Charlie Munger explains, the attractive thing about risk arbitrage or workouts is that their returns are independent of the stock market.
What Warren would do was he would buy a bunch of stocks, and then he'd borrow against those stocks, and he'd buy into these, they used to call it event arbitrage, liquidations, mergers, and so forth. And that was didn't go up and down with the market. That was like an independent banking business.
They're securities, or in this case a common stock, whose value depends not on what the market price does, but whether a given corporate event occurs. An announced corporate event occurs.
In the fourth quarter of 2022, Warren Buffett sold $550 million of Activision Blizzard stock. For Berkshire Hathaway, that's not a lot of money, but it's a move that does make you look twice, because he sold the shares at an average price of $74 per share. But he had previously thought Activision looked attractive in the low $80.
On January, whatever it was, 17th, 18th, 19th, Microsoft announces it, and the stock, which had been at 60, the stock which had been in the 60s, went up to the 81 or 2, and that looked like not a big enough spread to me for a few days. And then it settled back a little.
At his $74 selling price, there was 28% upside in the share if the deal went through. So why the change of heart? One possible reason could be that he saw something more attractive that he wanted to buy. The S&P 500 did come under pressure in the fourth quarter and reached its lows for the year. But this theory seems unlikely. In the fourth quarter, Berkshire didn't add any new shares to its portfolio, and the additions that it did make to some of the shares it owned were really small. Perhaps instead, Warren got cold feet about the Microsoft-Activision merger going through.
Berkshire has stock in Activision Blizzard, and you can argue that whether that'll go through or not, I don't know.
Well, Microsoft wants to buy Activision, we'll say it. Well, they said at $95 a share. And they've got the money. And obviously, mergers and big mergers, tech companies, all kinds of things, have got all kinds of problems with the world generally in terms of opinion. So you don't know what the Justice Department will do, or you don't know what the EU will do, and all kinds of things.
Well, near the start of December, the FTC announced that it was suing to block the deal. The FTC decided to sue to block the deal because of Microsoft's history of acquiring video game companies, assuring regulators that it would not make the games exclusive to Microsoft's Xbox, and then going ahead and doing exactly what it said it would not do. One major example of this is when Microsoft acquired Bethesda's parent company, ZeniMax. Some of Bethesda's games have been released exclusively to Xbox. Activision Blizzard CEO Bobby Kotick was on CNBC in February 2023. he was at pains to point out that mobile gaming has really become the biggest part of the video game industry, perhaps trying to get the narrative out that mobile, not console or PC, but mobile is really where regulators should be looking, since it's the biggest part of Activision Blizzard and the video game industry's business.
And that's because we saw so many people lure into video games because of the pandemic, and we're still trying to sort out what their real, normal, back to regular behavior is?
Well, I think what you'll see is as the industry has really shifted, if you think about the last 10 years, games used to be played on expensive consoles and in only developed countries with middle-class markets. For the last 10 years, the business has evolved to being principally on phones. And today, the biggest platforms are Apple phones and Android phones. And so those are much more accessible. So I think what you're going to see is people will be playing games. They're mainly for free. And the question is, how much premium content will they consume? And that I don't think we really know. But I think the good news is that the industry has largely evolved from a business that was about these specialized devices to these very broad appeal devices.
But CNBC's Becky Quick does a great job of pointing out that potentially regulators may be looking at this deal with the console market in mind. Hear how Bobby focuses on the businesses being about mobile and how strong competition is in Asia rather than just the US. Again, perhaps trying to shift the conversation away from the console and PC markets and away from the US.
It's interesting that you kind of put it in that light, because all of the regulators in the United States, in the EU, in the UK are looking at this deal, and I think they're looking at it from the prism of the consoles and whether it's going to be fair competition if Microsoft is allowed to go ahead and purchase Activision Blizzard.
Yeah, look, I think there haven't been any transactions. So whether it's the FTC or the CMA or the EU, they don't know our industry. So they're trying to come up to speed and understand the industry better. I don't think they fully appreciate that it's a free-to-play business, that the Japanese and Chinese companies dominate the industry. You look at Sony, you look at Nintendo. They have these huge libraries of intellectual property. Sony is Sony Studios. It goes back, 80 years. Nintendo has the very best characters that exist in video games. And I think they are a little bit confused about where competition is today. The best companies in the world right now are companies like Tencent and ByteDance. And these are companies that all have protected markets. We've struggled to enter the Japanese market. We can't enter the Chinese market without a joint venture partner. And so the competition actually isn't European companies, American companies. It's really those companies in Japan and China.
Microsoft has been working hard in the background to ease regulators' fears that it would make Activision Blizzard's games exclusive to its platforms. Microsoft offered Nintendo a deal to have Call of Duty, Activision's biggest game, be on Nintendo platforms for 10 years. Nintendo signed the deal. A similar offer was made to Sony to have Call of Duty be on PlayStation for 10 years, but Sony declined to sign. Nvidia signed a deal to have all of Microsoft's games and Activision Blizzard's games be on Nvidia's GeForce Now cloud gaming service. Becky points out that if UK regulators block the deal, there isn't a clear path for Microsoft and Activision to appeal. Based on all of this, it seems that Warren may have been slightly spooked by pressure coming from regulators on this deal. He does still own $4 billion of Activision Blizzard stock, and if the deal goes through, Berkshire would profit by about $1 billion from the current value of its stake. That's pretty small in Berkshire's world, but it's a cool story to keep an eye on.